Good evening. This is Ken Long from Tortoise Capital. It's July 10th, 2015, and I want to share some thoughts with you on what I call mastering the plus 2R battle drill, or what I call the problem you want to have. And I say it's the problem you want to have because the central concept of most of our intraday trading strategies is to put you in a position where you have a critical state that allows you to frame a trade at a minimum of 2-to-1 reward to risk. And so when that trade happens, you are in a position where the trade did everything that you hoped it would. And at 2R, because we framed that as a point of high probability resistance, you would fully expect price to hesitate at that level. It could come from it being a 10-day high, or a retest of yesterday's high, or a retest of today's high. But you see it beginning to hesitate at a 2R gain, which is exactly where you predicted that it might hesitate. And so we want to turn that decision making on what to do into our favorite low energy state battle drill. In other words, we're not going to spend a lot of cognitive effort on sorting through exactly how we want to handle this battle drill, because this is the prime territory that we wanted to get into. And since it's our most desirable case, we want to make sure that we have a very satisfying way to manage that decision in a way that reduces our cognitive load, reduces our emotional cost of processing the information, and ensure that we execute in the moment without regret and without too much angst. We have time later to study our results and subject it to analysis to see if we can refine it. But what we want to do in the moment of the trade is simply execute it according to our favorite battle drill. It's just like a football team that runs an off-tackle play and runs to daylight, where the running back takes his read off of the way the blocker is working. If he blocks to the right, you run to the left. If he blocks him to the left, you run to the right. So we want this to be executing routine things routinely. So what I want you to think about is a situation in which you made an entry at some moment based on whatever rules are firing for that particular strategy. It could be a Z trade, it could be a 1, 2, 3 entry, it could be an RLCO crossover, it could be a frog box entry. It almost doesn't matter. Whatever that entry is, you got your entry, and now that trade is moving the way that we hoped that it would, if everything goes according to plan, and it moves up smartly, heading towards the 2R resistance zone. And what you did was manage your exits and managed your stops by stalking that price and managing your exit according to your personally defined rules like a boss. It didn't give you any angst. You executed exactly the way that you rehearsed it. And so here we are approaching that plus 2R zone, and the region beyond that I think of as the region of catastrophic success. And so there's about four decisions that you've got to rehearse and know what to do in case any of these four things happen vicinity this region. Now what I'm showing is for the long side trades, and the logic is equally valid for everything on the short side. So let's take a look at this. The first thing that could happen is that the market and the participants don't care at all about where you drew your line for potential resistance at 2R, and they just decide they're going to keep buying it all the way up and through your resistance as if it doesn't even exist. And so it just powers right on through. So instead of failing, this thing moves directly into the region of catastrophic success. And so for this reason, what I want to do is remove all question about when I get on that thing or not. I will have prepared an order, a limit order, that is on the far side of resistance, so that if it goes through here and blasts right through resistance, I have been surprised into that trade, and at that point I have more than 2R in hand, plus momentum, and everything that's it's a stop order from other traders on the far side of resistance are all getting triggered, and that causes that first move beyond resistance to be a sharp, quick distinct move. And as that blasts through and it tricks me into that second position, my job is to take my trailing stop, wherever that was, wherever I had been managing that, and get it north of my second entry so that both positions are in the money and I have more than 2R in hand. I am just beginning to move through the region of catastrophic success, and I've got a double scoop position on, and both of them are in the money. That's the best of all possible worlds. Now, what we're going to do is keep that limit order in place on the far side of resistance, so that if we don't get case 1, if we get into case 2 or 3 or 4, and after we sell, price reverses and starts going up again, then we already have a buy order in place that ensures if this thing takes off and goes after we get out, we're going to be surprised into that position, and so now we can remove all the angst about where we are going to get into that position if it turns into catastrophic success after we've gotten out. So let's assume that case 1, blasting right through, doesn't happen. So what we've really done now is enter the Zeno stop region, or price is in a critical state where it's made a 2R move in our favor and it's beginning to hesitate at the moment of approaching that resistance. That's what we call the Zeno stop. The longer it takes to go through that zone of resistance, the more it looks like this is going to start failing and coming backwards. And so the Zeno stop idea is one that helps us determine how to trade off giving it room to run and capturing the profits that we made on this very nice move to 2R. So instead of case number 1, instead of blasting through and into the second position, it begins to stall and falter. And so in case number 2, what we have to have is a Zeno exit in which we are satisfied that we have captured enough of this excellent move to feel professional, but given back just enough to ensure that it had room to run if it was going to stop and then go. So you have to decide how much that really is. In my view, you cannot give back more than 1/3 of that 2R move up to resistance. And so that brings you in somewhere around a 0.6R retracement, or call it a 0.5R retracement. Anything larger than that, and you've given up more than 1/3 of what was already an excellent move. So my preference is somewhere between 0.25R and 0.6R. Somewhere in there is a profit preservation stop that will leave you feeling satisfied that you managed this trade and captured most of the profits, but still gave it time and room to be able to pause and refresh and go into the region of catastrophic success. Now at point number 3, at the moment that you execute the stop and reverse, or I'm sorry, the Zeno exit, you have to answer the question about whether or not to stop and reverse. On most trades, this is going to look like a pattern 1 regression line crossover north of the river, and then your proper target for that is the Bollinger Band mean, or a movement of a frog box away from that position. You can decide by looking at the chart whether or not that is actually a reasonable move, and if it offers you a 2-to-1 reward to risk ratio. If it does, then what you've got to do is ask yourself, do I want to try to get short a position that just gave me an outstanding move to the upside, or do I just want to wait for a retracement to occur? So you don't have to stop and reverse. If you do, it's because you see a 2-to-1 reward to risk ratio that's reasonable, and that's your target. So decide to stop and reverse or not right at the moment of the Zeno exit. You should know what that is already, because you know where the 2R resistance level is, and you know where you're going to take that Zeno stop, and you can already decide well ahead of time if this is going to be a trade that you're going to stop and reverse. Take a look at the market condition, the time of day, the sectors, and decide how much risk you want to take on that. Now, after we've exited, let's say that we have not stopped and reversed, decision number 4 is to decide under what conditions I will re-entry on a resumption of the primary trend, which is what we got on trade 1 and exited at point number 2. So in my view, if you're north of the river and the river is sloping up, any retracement, any universal entry that is north of the Bollinger Band mean, or even the south side of the river, is going to give you a higher low than your initial stop on your first trade, and what you have then is a lazy W pattern. It's probably a pattern 4. So what you want to do is, in my opinion, have a plan to look for where it's going to retrace after you've exited. If that happens 7 seconds after you exited, then all that means is that the probability of follow-through just got greater because it paused and reversed. It says nothing about your judgment about whether you got out or not, because 7 seconds earlier you exited according to a rule that felt personally and professionally satisfying. So in this sketch down here, what we can see is we have the price, it bounced off a resistance, we Zeno exited, and then we decided whether or not we were going to set a stop and reverse to the Bollinger Band mean. And now what we're doing is we're looking to see, did it retrace at the edge of the floodplain? Does it retrace and find support at the edge of the river? Does it find support at the edge of the Bollinger Band mean? Any one of those 3 areas is a legitimate place where we can have a re-entry into a continuation of this primary trend on a pullback. You might decide whether or not you want to let it go all the way to the south side of the river and play that retracement or resumption. In my view, when price falls out of the far side of the river, that's where you have to say this primary trend is over and now I have a short side bias. Now what does that do for you? If you waited that long and it never hesitated and just fell through the river, in retrospect you might be kicking yourself in the butt saying, oh, in retrospect I missed the perfect entry on a P1 reversal back to the mean. But that's not information that was available to you at the time. What you have to do is decide that you are or are not going to short that one if you get the Zeno exit. And then if you don't short it, then you've just got to say, this is one that got away, and that's not within my trading plan, so I don't worry about that one until I have enough professional evidence that says that's a good trade to always take. So that, in a nutshell, are the 4 decisions or the 4 situations that can occur. Now here's what I want you to look at on step number 4. Let's suppose that this resumption of the trend was muddy enough or fuzzy enough that you never really got a clear entry that satisfied you, and so it starts retracing but you're not back in. You still have this limit order on the far side of the old resistance which says if it does revert and then blast through here, I've already got a position where I'm going to get long here, and all that happened was I didn't find a way that I could personally get into that trade. No harm, no foul. You have resumed your trade on the far side of resistance, and you know that you have another 2-to-1 available from that position, only now you have 1 scoop on instead of 2. So that's what we mean by mastering the 2R battle drill. So just another way of looking at that, let's take a look at a slightly different presentation. Here we are in our initial trade, and we used our favorite setup or entry, and we were planning for a 2-to-1 reward to risk. So here's our line for stalking, then we drew our initial risk, and maybe we had some kind of sell-off on declining range volume, and it settled into a doji, and it gave us a 1, 2, 3 entry in a very orderly fashion. So there we go, and then we had maybe our frog box of risk that gave us enough protection that we would never take more than a 1R loss, and we've already decided that if this initial stop or the trailing stop anywhere along the way gets hit, whether or not we're going to stop and reverse based on a 2-to-1 reward to risk trade frame in the other direction. So we already know that, whether or not we're going to do that. And now we have picked on the upside some reasonable target that's non-controversial, and by that I mean we might have played for a return to the VWAP or the Z3 far side of the river and the floodplain all the way up to Z+3, or we might have targeted a range stat move or a return to the RL 270 or to a retest of yesterday's high, or a retest of the 10-day high, or some other form of resistance that got our attention that's non-controversial. And so what we've done is we've framed this trade with 1 unit of risk, saw 2 units of reward on a non-controversial way, and so we're aiming for a 2-to-1 trade, and in that trade frame we are happy to accept anything from a 0.5R win to a 1.5R win, and what our job to do is to manage that trade like a boss and take our profits when we can, aim for 2, but accept what it is that we can get. And so we take the far side of this 2R trade, and we say, look, my limit order beyond the 2R resistance level is what ensures that if this does turn into a runaway freight train, I'm surprised into the position without thinking, without worrying, without any angst. And then all I have to do is stalk this trade as it moves up through the gears towards my 2R. It's like a wildebeest that's going to hit that wall and turn and bolt back to the Bollinger Band mean. My job is to stalk it like a lion and worry about things like, when do I raise my initial stop? How do I manage my stops like a boss all the way up? But I don't worry about adding the second target because the trade frame told me when it was that I was supposed to do that, not earlier than 2R in hand plus momentum through resistance. That's the soonest place that I can add a second position. Now, this 2R resistance is also a likely spot for price to fail. It's likely to come up and retest and likely to fail because the last time it got to that resistance it failed, and that's what probably brought us back down to the entry. So if it failed all the way back to where we got in or where it found support the last time, we're not entitled to be surprised by that because it did what exactly it did the last time it was there. So that is a normal condition. So what I want to do is make sure that I've captured a professional amount of that gain. And so the 4 things that I have to do are to prepare for, when do I put in that second position? That was case number 1. On the far side of resistance at more than 2R in hand plus momentum. I have to plan for my Zeno exit ahead of time and say how much I'm willing to give back if it gets up near 2R and starts to retrace. I have to have a plan for whether or not I'm going to stop and reverse with the target of the Bollinger Band mean, and then all the way back to the previous support level. And then I'm going to plan for re-entry if I take the Zeno exit, and then instead of failing further, it continues to turn and go. Now, if it does get through in case number 1 and doesn't hesitate and just blast through, then beauty. We have 2 positions with more than 2R in hand and momentum, and we're in the region of catastrophic success. I say catastrophic success because it's like, oh my goodness, we aimed for 2 to 1. We were happy to accept anywhere from a half R to 1.5R like a professional, but now this thing actually went up and gave us 2R, almost 2R, and now what do we do with routine success or catastrophic success? We cannot allow that condition, which was the ideal state, to cause us to start thinking about it for the first time. Resolve in your mind ahead of time what your ironclad decisions are going to be that you're going to be satisfied with and which you can execute for 30 trades without varying from your protocol. Now, if you want to study what happens in each one of those 30 trades about some other exits that you want to test, by all means do so, and on the basis of the comparison of those ideas against the executed trade rules over 30 case studies, then you're in a position to make an analysis-based, evidence-based change in your posture. So what we want to do is have a plan to routinely manage this area up here in the Zeno stop region. You must master this decision point so that when you frame these 2 to 1 trades, there is absolutely no doubt in your mind what you do as you approach catastrophic success. That's what I mean by planning and rehearsing the 2R battle drill. Remember the 4 things that you have to plan for a second position if you get catastrophic success, how much to give back on the Zeno stop, whether or not you're going to stop and reverse, and then what your plan for re-entry is if it begins to resume just after you did the Zeno stop. So, keep your powder dry and your wrist measured, keep working hard, and we'll see you in the chat room. This is Ken Long from Tortoise Capital. Take care.